Palantir just pulled off another surprise. While the rest of the market was bracing for bad news, this earnings report flipped the script and sent investors into a frenzy. The stock was down 10% heading into the earnings. Sentiment was extremely negative, and that's exactly where Palantir tends to deliver. This setup was almost textbook. So today we're going to walk you through Q4 earnings, and I'll show you exactly how the psychology played out and what this means from here. So let's jump into it. My name is Jonathan Little. I make stock videos just like this. If you haven't already, make sure to click the subscribe button. Now, hopping over to the iPad, let's go through these amazing numbers. So what does this mean for Palantir, and how amazing was this Q4 earnings? So first piece, they had a 70% revenue growth, which is absolutely amazing. We're going to go through the differences between exactly where typical companies are and how far ahead Palantir is, especially ahead of the competition. So stay tuned for that. And then also they had 60% guide for 2026, which is absolutely amazing. And then the rule of 40. So we'll go into this more in depth later in the video, but to see it simply, the rule of 40 is typically you want to have 20 growth and then 20 free cash flow equals a score of 40. So that's a good indicator on how good the company's doing and how good estimates are for the growth of that company and the cash flow combined. Palantir is at 130, which is amazing. It's like 3 times the rule of 40. And so not only are they way above this, it's more like 65, which is absolutely amazing. And that's fantastic. And one of the best pieces that happened this quarter in the Q4 earnings is that there's 140% retention over net clients. So that means if you were a client for Palantir, assuming that for every dollar you spent last year, you're now spending $1.40, which is amazing because retention in business is the number one thing that these companies want to grow. So they're not always starving for new clients and their marketing cost is super high. This is great because it means they're keeping clients. And the clients that they are keeping are spending 40% more year over year. So for every dollar they spend 40% more the following year. Okay, which is absolutely amazing. Next, 50K in 2023 would have equaled 1.3 million in your portfolio. If you feel like it's a bit too late to hit on Palantir, we will go through that. Their market cap isn't insane by any means, and I still think this is a fantastic opportunity to get into the company, but it does not beat the fact that if you put 50K in 3 years ago, you'd have quite a lot of money, 1.3 million. Okay, the next piece is their gross margins. So on average, companies like to have 35% or above in gross margins. They're chilling at 80% growth margins, which are absolutely amazing. If you don't know what gross margins is, it's the revenue before expenses. Net is after those expenses, but still fantastic. They had 1.4 billion per quarter, and then the total contracts. So this is a big piece that a lot of people don't understand too. So when we talked about 140% net growth in the last slide. So 140% net retention for every client. They also have outstanding contracts. So they have $4.3 billion in outstanding work, essentially, that they haven't completed yet, which is amazing. That's fantastic. So if you're an investor in a company and you're wondering if the next few quarters are going to be great, this is like their pipeline is so full, they can't deliver on $4.3 billion worth of customers. And then in 2026, their revenue was $7.2 billion. So they essentially have another 2/3 of a year of revenue just waiting for them. And then now we're going to look at the EPS. So earnings per share, if you don't know what EPS is plus 80% quarter over quarter, which is great. And then 20% quarter over quarter growth on the overall company, which is absolutely fantastic. So if you're an investor in Palantir, you might be wondering, is this maybe a point where it's too late to jump into it? And we're going to go through that next, but I certainly do not think so. If we look at Q4 net income from 1 year ago, so Q4 in 2024, the income was 79 million. There was almost an 8x growth from last quarter in 2024 to now 2025, the income being $608 million, which is fantastic growth. So what does this mean for the rule of 40? If we look back at, obviously this is Q4 in 2024 and then Q4 2025, it went from 81% to 140% growth. So that is fantastic growth, especially looking at last year Q4 earnings. And then, so what is driving most of this growth? We're talking about big numbers, retention rates, new customers, growth in the cap size of the company. And this is exactly what it is. Most of that growth is coming from US-based growth. And you might be wondering, why is that happening? Well, it's very simple. They want de-globalization, so they want more nationalism, and it's being driven by commercial growth and by government growth simultaneously. Commercial growth last quarter was about 80%, which is pretty good, and then government growth was about 60% as well. So in total, I mean, that's what equals the 140 in growth. It's just a little bit of a split of both. Now, you might be wondering, there's a lot of government contracts. I didn't realize there's so many government contracts. And we'll talk about these, but a lot of these are long-term contracts. We're talking 10 to 20 years of revenue locked in on one single contract for governments. Commercial growth is the same. We're talking about 5 to 15-year contracts. And if you look at the contracts for the commercial, even if these contracts were to expire, who else would those companies go with? There isn't really any competition like Palantir in the space, especially when it comes to AI, software wars. And so who else is there? Not really too many. And that's very beneficial for Palantir and your money in the shares. So the main reason why there's so much growth in this space is these three reasons. The AI arms race, which is a big reason why governments around the world are jumping in on Palantir. But primarily the US government is trying to really maximize that, obviously, to protect against future AI wars. Because like we're seeing in the wars in Ukraine right now, on the front line, there's a lot of drones, unmanned vehicles that are holding down trenches. And so imagine 20, 40, 50 years in advance in the future, we're going to be seeing AI wars completely fought by AI, which seems unreal to even say. But the AI arms race is on. And the US is determined to make sure that they are on top of that. And a bunch of countries around the world, China, Russia, all these different companies understand the same is happening. Palantir is at the forefront of this. The second reason is the future of AI warfare, which we touched on. And then number three is, who is Palantir's competition? So if you look at the US government, if they're saying, well, if we don't go with Palantir to help us out, who else would help us out with these different things that Palantir helps with AI, security? No one. There is no one else. And that's why it makes them such a good positioning in the market where it's more of a monopoly. And I don't necessarily see in the coming future there being any massive competition that even comes close to Palantir. If we look at different sectors and their market cap, so I popped in a few here. So NVIDIA, obviously everyone knows NVIDIA, 4.5 trillion in market cap. TSMC, 1.7 trillion in market cap. Palantir, $350 billion. Google, 4 trillion, obviously one of the biggest companies in the world. Amazon, 2.5 trillion. Microsoft, 3.2. Apple, 3.8 trillion. So the average between all of them is $3.8 trillion average market cap. Now, if you look at that and then you look at Palantir, they seem like a little baby in the space. And that's because they are. If you're looking at growth potential in your portfolio, where to put the next 20, 30K, this is a fantastic option. Now, obviously, don't over leverage your positions. I recommend not putting any more than 5 to 10% of any given position in each stock, just to make sure it's well diversified. And obviously, that's not financial advice, but that's just what I teach to my students. And so 350 billion out of all these companies, what do you think is the next one to hit $1 trillion? Probably that one, because if the average is 3.8 between all of them, Palantir is 350, that's got a really big growth potential. So if you were to put 50K into that company and it turns into 250 or even maybe 350 in a few years, that's a fantastic indicator, and you're building your wealth more quicker than if you were to just invest in Google, which is a very, very established large cap company. So let's look at their balance sheet. 7.2 billion in cash, which is absolutely amazing. Zero debt. That's amazing. So if you're wondering if this company is going to go bankrupt, I don't think so. 55% free cash flow margins, and then 4.5 billion in outstanding contracts, which we discussed, in basically revenue that they haven't brought in yet because their pipeline is so full. And when it reaches a balance sheet like this, institutional investors are looking at it and saying, wow, what a safe investment. I can actually build a lot of wealth for my clients and my hedge fund. And this is typically when the private sector is catching up and saying, all right, let's jump into this. Let's put some money into it. this is a safe investment as well. But institutions are looking at this balance sheet saying, wow, what is the downside? And they're trying to find it. They're searching for it, which is great for you guys because you guys can put some money in and hopefully make a good amount of money out of it. So what is the pros of Palantir today? There was the best quarter over quarter growth. It's scalable. Reason why? It's not a ton of deliverables that they're offering that cost a ton of margins. Like we said, 80% gross margins. And then there's explosive growth potential in multiple different sectors. So in the government sector, commercial sector, there's long duration of those contracts, big ticket prices, and then the deglobalization, which leads to a ton of US-based growth, okay? So those are really the main pieces that are huge advantages and why you should really consider having Palantir in your portfolio. If you already have some, really consider dollar cost averaging every month and getting some more. This is why I believe there's a 10x potential in Palantir. I really do believe with a $350 billion, dollar market cap, I think there's no reason that this stock shouldn't hit at least 1 trillion within the next year or even 2 years, which means for your capital, if you were to invest, like we said, the 50K into Palantir, you don't know what that's going to become exactly, but there's a good chance that it could get to a point where it's even 500 or even more. So really consider this portfolio position. And then this is the advantage of Palantir. So they mainly decide who wins AI wars in the future. And obviously, like we talked about the AI arms race, they are masters at operations and business, scaling a very profitable business model, zero debt, almost $8 billion in cash, which is amazing. And then they're a monopoly in the marketplace, which is a big piece. If we look at all these other companies that we looked at with the market cap, as you can see, I mean, there's competition in each. Like NVIDIA, they have AMD competition, even though AMD is not even close to the size, but there's still competition. There's competition in all these. Walmart, there's tons of online providers now for delivering stuff. Microsoft, Apple's obviously got massive competition as well. Palantir is kind of a lone wolf out there. There's not a ton of Palantir competition. And then constant feedback loops for Palantir. So what this means is when they're doing these contracts, I mean, they're growing at such an exponential pace, they're able to implement constant solutions that impact not just the US-based customers, but governments around the world wanting that same power and technology and security for their nations. And then larger deals equals more customers. And so pretty simple, the more governments and then the more commercial contracts they get around the world, higher ticket prices will keep raising, and then there'll be more revenue per clients. And then like we talked about, it's typically 140% net. So as the cost of the goods increase, inflation, the prices are going up, those clients are still staying on board, which just means more money for the bottom line for Palantir. PE ratio, let's talk about it because some people are worried about it. It is high. It is extremely high. But remember that it's not a position that hasn't had a high PE ratio. So don't let that stop you. And there's a quote here that I want you to remember. It's never too late to buy a good company. Even if there's an extremely high PE ratio, people have been saying that about Apple for years and Amazon for years. Oh, there's a high PE ratio. Even look at NVIDIA over the past year. People are freaking out about the PE ratio, and it still made millions and millions of people hundreds of millions of dollars. And so why is Palantir stock so important to own, and why is Palantir so important for the marketplace? So it's pretty simple. Palantir is the bedrock to these industries. And so think of it this way, massive amounts of competition. And then whoever is at the finish line, bring this over here, whoever wins, their prize is Palantir. So whoever wins, Palantir is at the end and they're like, perfect, we are happy to help you out with your security. And that's kind of how this works. Whoever wins in the cloud, in the storage, API, hardware, power, cooling, whoever wins in these industries ends up going to Palantir and saying, wow, we need your service desperately. Like we want it. And so in these industries, although these are very competitive industries, they will all need Palantir. Every single one of them. It's just a matter of who needs it the most and who has the most customers and ultimately wins their different sectors. And that's what we're seeing in the government industries as well. Whoever wants the most protection will go with Palantir, obviously for those securities for their nation. So guys, I hope you enjoyed this video. I love putting videos like this together. This was such an exciting earnings. My take on this is just keep dollar cost averaging. If you see a dip, don't let it freak you out. Just try to purchase more and really consider doubling down on this stock because with the market cap being 350 billion, there is a massive growth potential in this stock before it goes massively down in the other direction. They just have too much revenue, too good a profit growth, no debt to not be considered such a good position in your portfolio. Make sure to stay safe. Do your own analysis on the positions before you jump into them, of course. Don't just take my word for it. Do your own research. And with that being said, see you next time. Take care, guys.